sponsored by the Securities and Exchange Commission of Nigeria.
Foreign firms in Africa is not peculiar to Nigeria. Several proposals have been put forward in countries like Tanzania and Ghana to either persuade or force foreign companies making money in Africa to share the profits with the markets in which they operate. In Nigeria, many have called for the listing of large telecommunications and oil companies that make billions of dollars in Africa's second largest economy. Beyond sharing wealth, the dearth of listings could be seen as a negative for local capital markets because listed companies offer securities for investments to local asset managers. The scarcity of securities in even the most developed financial market in South Africa means that African assets are often sent abroad.
We have the issue of choice. That means people fund asset managers and they don't have a wide variety of choice. They're not able to diversify properly because by the time you look at financial services, Dangote Cement, your portfolio is already 90% of market cap. So there's issue of diversification issues with choice, issue of spread, and also the fact that we could be creating bubbles because if everybody is chasing the same few stocks, that could lead to a bubble at some point, overpricing and so on, and ultimately a collapse at some point if a few people pull out of that stock. So those are some of the issues that you have when the market is not broad or deep in terms of the number of listed securities.
In Nigeria, there are varying opinions on how to bring more foreign companies to the stock market.
There are some people that are saying, look, you don't have to appeal to them. This is Nigeria. If they want to operate in Nigeria, they play by the rules. Go and get a listing. I'm not sure that would work in a global way because people have options. They can close their plants, they can go to Ghana, they can go to Angola, particularly if they're in oil. So I'm not sure that's the way of the world now. Other people will say, so you go from force them, decree, legislate. Someone will say, no, it's a free world, let them do whatever they like. I think you have to strike a balance. They can't do what they like. They operate within Nigeria. They are better off when Nigeria is better off. We're all complaining that there's GDP of 7% over 5 years. Meanwhile, people are getting poorer. So it's clear to us that, it's not because they are not quoted that there's a problem, but we have to have an inclusive economy. And one way to make an economy inclusive is to get at least the commanding heights of the economy quoted on the stock exchange. So that people are paying taxes. We have a sense of what's going on in the economy. So I don't think you can just let people do what they like.
I do want the Nigerian stock market to reflect the Nigerian economy. I'm very excited about the power privatization program. We've been very clear that it will be very good for the success of these companies that they are listed, because one of the things that listing does is encourage greater transparency and greater scrutiny and better corporate governance. So we would like to see the power companies listed.
Mine is very simple. Give them incentives. Concrete, practical, naira and kobo bottom line incentives. I will start with tax. If you're listed, you get some rebate on your corporate tax. Maybe we can use that to lure people to get a listing.
While analysts remain divided on how to bring more foreign companies to the bourse, 6 months into the year, investors are still holding their breath for the first major listing in 2013. Meanwhile, 2 Nigerian oil companies have already listed on the London Stock Exchange this year. The Nigerian Stock Exchange is taking steps to bring these and other companies to the local bourse.
There would be listings either here or there, either in Nigeria or on the LSE, because the LSE provides a little bit higher liquidity than Nigeria, and we will see the reason why some of them will go there. But looking at the benefits of listing in the Nigerian Stock Exchange, for example, the Nigerian Content Development Board or Monitoring Board, I think, has indicated, and the SEC also has indicated, that companies will probably benefit from listing the Nigerian Stock Exchange and qualify as an indigenous company. So we're likely to see those companies who listed in the LSE probably do a cross-listing here in Nigeria. And we're talking to the LSE and those companies to see how we can put the mechanism in place to allow them to have dual listings, either simultaneously or otherwise, so that they can access both markets and be able to trade and get the benefits of both markets. But surely, the three oil companies that have listed in LSE, we are in talks with them. They're actually also interested in listing in Nigeria. There are a few other companies who are interested in listing in both Nigeria and London and other markets as well. But the framework is being put in place to ensure that there is seamlessness in that particular process. A business development team was created after this new management took over 2 years ago. And the purpose of that business development, division, is to actually go out there and encourage or bring in new listings to the exchange. So far, we've had over 1,000, companies on our pipelines who we're talking to at different stages of readiness. But before that, the exchange first of all had to do some kind of in-house cleaning, including, ensure that there is a fair, competitive, open, transparent market that's actually trading. So the structures have begun to be put in place. So enhanced rule making, enhanced rules that have been amended and based on what I call world standards of LSE, JSE, and the rest of them, and also the act of zero tolerance. So when companies or issuers or brokers or anybody within the framework of the market does not or does not comply with the rules, then there is zero tolerance for that. And all of those structures have to be put in place for the business development team to go out there and attract companies, because it's all about confidence, fairness, openness. And we've seen on our road trips, doing road shows to issuers and to investors, there has been significant interest in listings that are likely to happen in Nigerian stock exchange. But also the issue is about turnaround time. The process in Nigeria, for example, for companies to decide that they want to list to the end of it can be a little bit longer than normal because of the certain situations that they have to go through. For example, they have to convert to PLC, go to CAC and increase their shareholding, increase the number of shareholders they have, and all of those things, and even internally get shareholders to believe that this is probably the right direction to go. But yes, we're seeing quite a bit of interest in listings in the Nigerian Stock Exchange.
These are expected to enhance the NSE's prospects of becoming a major destination for not only listing Nigerian firms, but some of the largest companies on the African continent.